Hello, everyone. I'm Matt Clark, research analyst for Money and Markets here with this week's Stock Power podcast. Now, today I'm going to discuss a power stock that specializes in exploring for oil and natural gas off the coast of West Africa. It scores a 97 on our Stock Power rating system. Now, before I do that, I want to make sure that if you have a question about a stock or maybe the broader market for Adam, Charles, or myself, you can email us that question at feedback@moneyandmarkets.com. We'll put that right down below here. And if we do use your question in an upcoming video, we're going to hook you up with some very cool Money and Markets gear for free, including t-shirts, hats, sweatshirts, all sorts of great stuff. Again, the email address is feedback@moneyandmarkets.com. Make sure you head over to moneyandmarkets.com. It is your home for safe, sound, smart, simple, profitable investment information for your portfolio. On the site, you can check out that proprietary Stock Power rating system. We rate thousands of stocks based on 6 fundamental and technical metrics. You can create your own watch list, track your stock performance, and get all of our in-depth analysis all for free. Now, on with today's podcast. Energy stocks are hot right now. There's no question about that. The Energy Select Sector Spider Fund, which is XLE, is up 47% over the last 12 months. This is a lot due because of exploding prices for oil and natural gas, as well as demand outpacing supply, which is causing the push up in energy stocks. And it leads me to the 97 rated power stock I have for you in this episode of the Stock Power Podcast. This company specializes in exploring and producing crude oil and natural gas in West Africa. And it's 176.9% jump in share price over the last 12 months gives us that maximum momentum that we like to see in stocks we recommend. Now, before I get into that, it's important to understand that not all oil and gas companies are the same. Oil and gas companies take part in 3 different kinds of operations. You have upstream companies. These are the companies that explore and produce oil and natural gas. Then you have midstream companies. These are the companies that specialize in transporting and storing oil and natural gas before they're refined and processed. And then you have downstream oil and gas operations. This includes turning oil and gas into finished products like gasoline, heating oils, jet fuel, that sort of thing. So you have those 3 types of oil and natural gas company operations. Now, in terms of finance, a good way to tell the health of any company, not just oil and gas, but any company, is to look at its free cash flow. Free cash flow in finance terms is basically the amount of money generated, then you subtract the amount of money spent on operations, and that gives you free cash flow. It's basically the money that's left over after a company meets all of its operating and CapEx needs for a year or a quarter. High free cash flow means the company is generating more money than it needs. Low cash flow obviously means the opposite. Now, in May of 2022, Rystad Energy reported free cash flow of upstream oil and gas companies. Remember, these are the ones that perform oil and gas exploration. It reached a record of $493 billion globally. That free cash flow will jump to $834 billion this year. That's a 69.2% increase from last year's free cash flow total. Now, in this episode of the Stock Power Podcast, I'm going to share with you a company that explores oil and natural gas in West Africa, and I'm going to tell you why it is a strong contender for your portfolio. That stock is VAALCO Energy Incorporated. It trades on the New York Stock Exchange, and its ticker symbol is EGY. VAALCO specializes in exploring, developing, and producing crude oil and natural gas. Its exploration is centered around the offshore regions of Gabon and Equatorial Guinea in West Africa. Basically, it has platforms off the coast of these 2 countries where it's exploring for oil and natural gas. EGY scores a 97 on our proprietary stock rating system, which means we're strong bullish on the stock and expect it to outperform the broader market by at least 3 times over the next 12 months. Now, it scores very high on our momentum factor. It scores a 94, and I'm going to dive into that in just a second. Now, this is also a great quality stock. It scores a 93 on that metric. Its return on equity is 73.3% compared to the fossil fuels exploration industry average of just 14.3%. So it's nearly 6 times higher in its ROE than its peers. EGY also has a net margin of 36.4% and an operating margin of 46%. Now, let's get into that VAALCO momentum that I talked about before. Over the last 12 months, EGY has jumped 179.9%, and that includes a 48.5% rise since May. So just in a period of about a month, the stock has risen 48.5%. It's hammering its industry peers, which are only averaging about a 67.7% gain over the same 12 months. So it's just beating the pants off of its industry peers, and it's had a nice run up over the last month or so. So it really shows that maximum momentum that we love to see in stocks that we talk about. And the company's financials also paint a nice picture as well. After 2 straight years of declining revenue, EGY posted a $199.1 million up in its annual revenue. That was 196.3% increase over the previous year. Now, the company is projecting annual income of $394 million this year, which constitutes a 98% jump from last year, which again was 196% increase over 2020. So you see nice big gains in annual revenue for VAALCO. And the demand for oil and natural gas isn't going to go away anytime soon. And companies are scrambling to increase supply by increasing output and seeking out new resources. As one of the only companies that's tapping offshore oil deposits in West Africa, VAALCO is a strong contender for your portfolio. Now, let's look back at our YouTube poll question last week. New and used car prices have steadily increased over the last few years as demand has outpaced supply. And we asked if viewers were out car shopping right now. Interestingly enough, a vast majority, about 74% of those who voted said that you were not car shopping because you were waiting for prices to pull back. 11% said you were, and you were looking for a used car. 7% said you were, and you were looking for a new car. And 9% of you said that really public transportation and ride sharing was a much better deal than buying a new or used car right now. We also received some comments on it. Federico said he bought a hybrid 4 months ago after he disposed of a 20-year-old van. I can only imagine what the 20-year-old van looked like. The Cox Automotive Moody Analytics Vehicle Affordability Index calculates the number of weeks of household income needed to buy the average new car. As of May of 2022, that index was at 41.1. That's the highest it's been since 2012. That means it takes 41.1 weeks of median household income to buy a new car. That's pretty massive. That's almost a year of income to buy a new car. And that's the highest it's been since 2012. Thanks to everyone who participated in our weekly poll. Remember, you can vote in our weekly poll question by heading over to our YouTube page if you're not there already and click under the community tab, and that poll will be right there up top. And if you have a question about a particular stock or a sector, the broader market, or maybe the economy that you'd like me, Adam, or Charles to take a look at, email us at feedback@moneyandmarkets.com. That's feedback@moneyandmarkets.com, or you can post down below here on our YouTube page. We'd love to see what you have to say. We'd love to answer your questions as well. And if we use your question in one of our upcoming videos, we're going to send you some very cool Money and Markets gear like hats, t-shirts, sweatshirts, all sorts of great stuff. Although it's pretty hot, sweatshirts may not necessarily be what you're looking for right about now. Also, head over to moneyandmarkets.com, sign up for our free daily e-letter. We give you safe, sound, smart, simple, profitable investment information. Also, check out my Stock Power Daily article that goes up every single weekday. And in it, I give you one stock that rates high in our stock power rating system that you should look at for your portfolio. Also, while you're there at moneyandmarkets.com, check out that stock power rating system. You can use our metrics to get the ratings of thousands of stocks. Go to the website, and in the top right-hand corner of our homepage, you can type in a stock ticker, and you'll be able to get the rating of the stock, any fundamental data, a stock chart. You can add stocks to your watch list. You can track the performance of stocks, and you can do all that for free at moneyandmarkets.com. That's all for me this week. Until next time, this is Money and Markets research analyst and host of the Stock Power podcast, Matt Clark, wishing you all safe trading.